stop by and see this program. We're going to be here broadcasting live until 11 o'clock, as you said, and we hope to see you. 1111 Douglas Avenue in Altamont Springs, just south of 434 and just west of I-4.
And we have a whole another hour to take your phone calls at 844-220-0965. That is 844-220-0965. We are planning tomorrow.
Today.
All the way to 11 o'clock right here on News 96.5 WDBO.
This is News 96.5
WDBO.
All right, you got 6 minutes.
Live team coverage.
Morning, Joel.
Morning.
Good morning, everyone. How are we doing today?
Good. What's up?
So I'm in my 40s. I got a couple of kids, and obviously thinking about already the future. But I had basically a retirement plan with my old company. That was about 10 years ago. I kind of left it there, and it's been growing, but I really haven't, quite frankly, paying any attention to it. I'm not putting any additional money to it. I just kind of left what was there. Now I'm with a new company, and obviously it's been 10 years. I have a new retirement 401k. So I just wanted to know, should I even bother transferring what I had in the other company since it's growing? Obviously, with the marketing and everything happened this week. But, just should I just even bother transferring or just kind of leave it there?
Possibly. It depends on what platform, if you will, that the old plan is on and your new plan. Is your old plan on with an insurance company 401k?
No, my old plan is basically with it's not with an insurance company. It's basically with the airports. I used to work for OIA.
Okay, good. Good.
And
what
basically, they had their retirement company.
And what's the new company? What do they have?
The new company is with the county.
Okay, good. Yeah, I would move it. What do you think, Denise?
Well,
Okay.
yeah, because you're going to pay attention to it more. Where it's sitting, you just told us that for 10 years you really haven't looked at it. But if you roll it over into your current plan, of course, if that plan document allows it, then I think you might be more on top of things and be doing the right things for yourself.
And you want to do a direct transfer, go to HR and give them the information on that plan and move it over there. This way you don't lose track of it either.
Yeah.
It's best to have it in one place. Morning, Austin.
Morning.
Hey, how y'all doing this morning?
Good. What's up?
Ready. Just a generalized question, I guess. I'm currently serving tables, so there's no retirement offered. So I've kind of created my own benefit and started building my Roth. Just a quick question. I was considering the market and the downward swing it's taken in relation to this virus and all that. Would it be better to continue just to build my Roth, or maybe go after stocks? Considering I feel like you can get them at a discount right now with everything that's going on. But I feel like the economy's still there. People want to spend money. They want the products.
Austin, you are a smart young man. Exactly what you said. Things are on sale right now. As we like to say, the stock market is the only market when things go on sale, people run out of the store. People should be running into the store. In fact, this week I had somebody one of our clients walk in with a $500,000 check he's been holding on to. He said, I want in. He says, the opportunity, things are down.
The same thing happened with one of mine.
That's what smart people do. So, Austin, to answer your question, I would continue to fund your Roth to the max. Now, the question is, what is your Roth invested in?
No, I probably should get some advice. I've been kind of doing this all on my own.
Okay.
And, I'm just with Fidelity and just doing some generalized investing. I'm somewhat new to it all.
Okay. How old are you, Austin?
I am 32 years old.
Okay. All right.
I've been putting money in a savings forever, and I just know that's not the greatest thing to do. With inflation and all, I know I'm losing
Austin,
buying power, but
smart young man.
Well, you do need that savings account, Austin, just simply for your emergency fund.
But put in that
I probably have my emergency fund is probably. Can I just throw a number out there? Do you mind?
Sure, go ahead. It's your money.
No, you're right.
It's your life. What's going on?
I've got two. I've got a 7-month and a 24 or a 28-month-old, and I've been building my savings. I got about 30K in there, and I just know it needs to be invested. I know I'm just losing buying power every year. It goes by. It's sitting there.
Well, you're
but
100%
at the same time,
right.
like I said, being a novice, it's almost like I don't know what to pull the trigger on exactly.
Okay, let's back up. You're 30-some years old. Well, first of all, you have a couple of children, okay? So what we want to do...
My perspective on everything.
Okay. So I understand. So what we want to do is take care of those that can't take care of themselves, right, Denise?
Absolutely.
So let's talk about what we need to do to start out with for Austin in that regard before we get into his investing situation.
Well, it's important to take care of those two little babies and
Custodial account, maybe?
well,
No,
not yet. We want to start with life insurance.
We want to take care of you first.
Okay.
Absolutely. God forbid anything happened to you, and or your wife. You want those kids to be taken care of. So that's going to be one of the first things you need to invest in. Okay, if you haven't already.
And Austin, the key here is to buy the right kind of life insurance. Get yourself some 30-year term. Go to Select Quote. Go online. The stuff is cheap. You can get it for
Lee Road, and Fairbanks. This report is sponsored by Upwork. When you need in-demand talent on demand, Upwork is the world's largest network of independent professionals like designers, developers, data scientists, you name it. When you need in-demand talent on demand, Upwork is how. Triple Team Traffic, I'm Stan Morris, News 96.5 WDBO.
This is Channel 9.
All right, 30 seconds.
This is Tom Terry. This is where Orlando turns first for breaking news, weather, and traffic. News 96.5 WDBO.
Hey, it's Joe Kelly. Join me for Orlando's morning news every weekday morning starting at 5. Just ask Alexa to set an alarm and wake up to News 96.5 WDBO. And when you get in your car, listen to 96.5 FM. And I'll make sure to get you to work on time with Triple Team Traffic and help you get around the changes from the I-4 Ultimate Project.
Now, our Ask the Experts weekend continues on News 96.5 WDBO.
All right, here we go. Well, it is a second hour now of On the Money with the Certified Financial Group right here on News 96.5 WDBO special edition here on March 7th, 2020, because today is the annual shred event at the offices of the Certified Financial Group, and that's where we're going to find the Oracle of Orlando. Joe Bert alongside Gary Abely, 1111 Douglas Avenue. Joe, I can hear the wind.
You can hear the
wind. What else are we doing out here today?
Well, we are here as a service to our clients in the Central Florida community to help you shred those documents that you've been storing all year long that you don't want to throw out there in the trash. We have a big industrial shredder out here. You can see us shredded right before your eyes. We're broadcasting live from our parking lot, as you could hear the wind howling around us, and we're tucked under the blankets and the headphones keep our ears warm here. And we're also on Facebook Live, so if they want to peer in here and see what we're doing, Kyle, how do they do that?
If they want to watch, just go to Facebook.com, and then in the search bar, click the On the Money Podcast. Put On the Money Podcast in the search bar, and that way, hit like, and then that way you'll always know if when we go live. So each and every Saturday, we'll come right up in your feed. That's the easy way to do it. If you don't have a Facebook? No problem. Head to YouTube. Go over to Financial Group's web YouTube channel. So go to YouTube.com, put Certified Financial Group in the search bar. You'll see the CFG logo, the Certified Financial Group logo. You can go to their page, go to their channel, and then there's a live stream going on right now. You can watch it there. So you have a smart TV, YouTube app on your smart TV. You can do the same thing. So lots of different ways to watch them this morning and check out the views from the Shred event. But if you're on the radio, well, we're doing what we're always doing, but we're doing it in the 10 o'clock hour, and that's taking your phone calls at 844-220-0965. That is 844-220-0965. And if anybody's tuning in for the first time and has never heard of the Certified Financial Group, Florida's oldest and largest independent firm, what can they call you about today?
Well, Gary and I are here to take the questions that you might have. Gary and I are part of the 12 Certified Financial Planner contingent here at Certified Financial Group. We do financial planning, investment management for a fee. We work with our clients on a fiduciary basis. And we're here to take your calls, questions that you might have about stocks, bonds, mutual funds, IRAs, 401ks, long-term health care, annuities, life insurance, reverse mortgages, and more. We're dealing with all that along with the wind this morning. Things are blowing around. But we're here to take your calls. It's absolutely free. This is what we do. This is not a one-hour infomercial where we tell you all about the things that we do for our clients. This is what we actually do. And the planning that's done in our firm is done only by Certified Financial Planner practitioners. We're very proud of the group that we have. And two of our Certified Financial Planners also happen to be CPAs. So Gary's sitting next to me here this morning. In addition to being a Certified Financial Planner, is also a Certified Public Accountant. So we're here to take your calls. Please pick up the phone and dial these numbers.
844-220-0965. 844-220-0965. 0965. Shirley in Port Orange has dialed us up, and she's been waiting very patiently, so let's get right to her. Shirley, go ahead. You're on with the Certified Financial
Good
Group.
morning, Shirley.
Good morning.
Good morning. Thank you for taking my call.
Sure, what's up?
Okay, so what I'm planning on doing is over the next 6 years is converting an IRA and 401k money to a Roth IRA to reduce my RMDs at the age of 72.
Okay.
So the first one is with the IRA, it's about $70,000, and $8,000 of it was from after-tax money contributed in the years of 86, 87, 88, and 92. And about $4,000 was contributed from a company thrift plan rollover.
Okay.
The problem is I did not fill out that form 8606 for any of those 4 years. And so I have a couple of questions on that. Will that trigger an IRS audit, or do I just fill out the forms, pay the $50, and be done with it when I convert it?
So I would suggest that you do just the latter. In other words, you just fill out the forms. I don't think it's going to trigger an IRS audit. It might trigger a question because you haven't filled out the 8606 in the past. But as long as you have the backup, and it sounds like you have very good records because you not only have the dollars, you also have the years. As long as you have the records, you're going to be fine to establish the basis. Now, the question I have for you is when you do those conversions, you want to probably do some strategizing, and I'm guessing you probably have thought of this already, but to calculate how many years you're going to do that between now and age 72 so that you spread that cost over several years if you have several years left.
Figured out we would be able to pay the taxes on the different amounts being converted each year from our savings. And so we would take care of that. And the main purpose of it was to reduce the required minimum distribution at age 72 and beyond, because we would be put in a higher tax bracket, which then makes us pay IRMA on Medicare and Part D, and also Medicare Part B. So that was our thing. I was just concerned if there was anything we should be aware of that this would be a problem in doing.
No,
converting them to a Roth IRA.
I think you're fine. I would just do a pro forma tax return like I had suggested before, just to see how much you can convert each year and perhaps stay in a lower bracket versus trying to do this all at once.
Well, the first amount I gave you, that $70,000 would be done this year, and then additional amounts equivalent to that would be done each year after.
Okay, all right.
And we've already.
That's in addition to any other income that you have.
Yes, exactly. And we're trying to stay under a certain amount so we don't get into those higher tax brackets of 32%. What have you.
All right. So you're already in the 22%. You're just trying to avoid getting into the 30s.
Yes, we are.
I think your plan is terrific. I think that's smart. And then what I would suggest, and what a lot of folks don't do, and I'm just going to take your question and turn it around a little bit, is, as you know, I'm sure the Roth is one of the best savings vehicles, in that all of the compounding and all of the growth is not taxed. And what investments you put in that Roth is very important versus what you put in a regular IRA versus what you put into a taxable brokerage account. And so we would usually suggest to our clients that their most aggressive investments be in the Roth, those that you would expect to appreciate the most, right? And then in the brokerage account, the non-retirement account, you're going to want tax-efficient investments that hopefully generate long-term capital gains favorable tax rates. And then in your IRA, your regular IRA, not the Roth, you're going to want the fixed income portion, because that's going to be taxed at ordinary rates, and you want that to grow, in theory, the slowest, right? So where you put the assets in those three different buckets of money is very important for tax efficiency. And it sounds like you've got a good plan in place.
Now let me be sure. I think you said this. I want to be sure that you're on the right track here. The tax amount that's due on the Roth. In other words, if you're moving $70,000 from an IRA into a Roth, and you've calculated the tax on that, whether it's $15,000, $20,000, whatever it is, you don't want to take that out of the Roth money. You want to transfer it in whole, because otherwise you really set yourself back, and you'll never get caught up as to where you could be and should be by doing that conversion. Some folks do that, Gary, and then they pay the tax out of the thing, and they really end up with a lot less in the Roth, and they're digging themselves out a hole for years to come and get back just to where they started.
Exactly.
You're right, and we already figured out. Okay. We were going to pay the taxes out of our current savings.
Okay, great.
Perfect.
Good.
That's perfect.
Good.
The amount is being rolled over.
Good. Okay.
And then I have a second question, and that concerns about moving individual stocks and bonds accounts that I have that I've had for, since the 80s and 70s into a Fidelity account. We were being told to do that. But my concern is what is the benefit and what is the cons, the negative in doing that? Because currently I have Prudential stocks, some Bain stocks, and Lord Abbott funds. They're currently run, in the individual companies' statements I get from them. And Fidelity saying roll them all into a Fidelity account, and you can look at them all in one place. What's the benefit of doing that?
Well, the benefit is that you've got it in one place. It's easy to track. All the dividends and whatever they pay are be automatically reinvested. There's really no cost to roll that in there. You may have a modest cost when the time comes to sell, but the way the brokerage firms today are so inexpensive for those transactions, it really is far more cost effective, and you only get one tax statement. So it's easy, and it's far easier to keep track of, particularly as we age, because you get these statements and you kind of forget what you have. And like I said, the nice benefit is that any income that they pay can be reinvested in that one account.
And I always think of what I call now the I-4 contingency. In other words, if your husband and yourself are on I-4 and you have an accident, God forbid, you're making it a lot easier for your heirs, and maybe children, to see everything on one statement. All of the cost basis information can be put on the Fidelity statement as well, so that can carry over. You can have Fidelity bring over the cost basis information from these prior purchases, and then you have it very easy in one place. So it is convenient. I can say this when we try to help clients who have passed away, and maybe we were managing a portion of their assets but not all of it, and it's somewhat of a nightmare for the children they don't know what they don't know.
Right.
So if you make it easier for them, I think that's the main benefit.
And then one more benefit from an estate planning standpoint. You triggered something, Gary. You're going to set up that account as tenants by the entirety, I would presume. And the benefit to that is that if that one of you gets sued, those assets will be protected. But secondly, if you set it up by tenants by the entirety, you can also set it up as a TOD, which means that if you and your husband are gone, it's going to pass without probate to your survivors. And as opposed to having all those loose accounts somewhere that your kids or grandkids are going to have to deal with and probate and all that other stuff. So this is what we do day in and day out as certified financial planner practitioners, a certified financial group. We do investment management and wealth management for clients and financial planning for a fee. We work with our clients as fiduciaries. Our firm has been around for many, many years, almost going on 40 years. And we're here to take your calls this morning. So if you have any questions about any financial issues, give us a call. Those numbers are Kyle R.
844-220-0965. 844-220-0965. Special edition today. We're going all the way up until 11 o'clock. So again, 844-220-0965. And Joe, I believe there's people in the office right now as well.
Gary, I did it again. Rodney Ownby.
Gary's sitting right next to you.
We're both CPAs. We'll give you a pass.
Rodney Ownby is in the office right now, so if you want a detailed question that you might want to answer off the air, give us a call, 407-869-9800, 407-869-9800, or 1-800-EXECUTES if you're executing a legal document. If the line is busy, you can leave a message, and Rodney promises to call you back. And we are here to take your calls, anything that might be on your mind regarding your personal finances, questions that you might have about your IRA, about a 401k, about mutual funds, long-term health care, stocks, bonds, real estate, annuities, life insurance, all that and more. These are the things that we deal with day in and day out as certified financial planner practitioners, and we'd be glad to take your calls this morning. So once again, you pick up the phone and dial these numbers.
844-220-0965. Shirley, thanks so much for the call. If you want Shirley's line, again, 844-220-0965. Ralph at Celebration, hang on the line. You're going to be first up after we get the three big things you need to know. We are planning tomorrow.
Today.
With the Certified Financial Group, live from their office at 1111 Douglas Avenue, right here on News 96.5 WDBO. Tom and Bartow. Tom, go ahead. You're on the Certified Financial Group.
Tom, good morning.
Hey, good morning, fellas. How are you?
Good. What's up?
How you doing?
Pretty good. Hey, I'm kind of in a situation that one of your previous callers were in that, was in the 2025. Now, I got started late. I'm 63 years old, and I'm not happy with the return that my company has me in. It's Merrill Lynch. I talked to the representative last night on the phone. My return has been like 2.4% since the first of the year. So I've made a whole whopping $144 in this booming economy. And so I asked her, I said, now my company will let me go ahead and roll over my current 401k into a traditional or a Roth. I think that's what I want to do. Now, I plan on working until I'm 68 and a half, and I'll tell you why. Because at 66 and a half, I'll be able to make as much as I want without being penalized by the IRS. So right now I'm currently saving 15% out of my income, which equates to about $9,000 a year. And my net income every year is going to be those 2 years that I retire and I can live off Social Security. My net income is going to be about $43,000. So that's why I want to work till I'm 68 and a half, so I can work those 2 years and hopefully pocket, $85,000, $90,000. So do you guys handle traditional IRAs and Roths that I could come in and talk with you? I want to assume a little more risk. I'm assuming Trump's probably going to be reelected. I think assuming a little more risk is probably not all that bad. But I want to make more than 2.4% right now on my return, guys. And they got me in a limited number of stocks. I don't have any options to go to. They've got me locked into those stocks. I can't change those. So what would your advice be to me?
Well, let's put this in perspective. And you are probably like the majority of the people out there that see records on the Dow and the S&P, NASDAQ every day. Things are really going through the roof. And you've got 2.4% return for 2 months. All right. First of all,
I'm not very happy.
Well,
yes.
no, I understand what you're saying. What would you expect that to do over the last couple of months with the economy doing it? What would you be happy with rate of return?
Well, to be honest with you, when I had an IRA before, and then I gave it up and got in between jobs and just continued for too many years.
Sure.
But at that time, I was making a 7% return.
Mm-hmm.
These days, what would I be happy with? A 5%, maybe 6%.
Okay.
Which I don't think is a whole lot of risk. I mean, most financial advisors
let me
will
stop
tell
you right here.
you know,
Let me stop you right here.
Okay.
You said 2.4% for 2 months. If you annualize that, that's over 12% for the year.
So that's about 1% a month that you've made so far this year,
right.
Tom. And so if you're saying you'd be happy with a 5-6% rate of return, that would be earning like a 0.5% a month. So you're ahead of that. So I think Joe's point is well taken.
Okay.
And not to say that the investments that you have are maybe the most appropriate for you, or maybe they are. I don't know without looking at it. But I do think that we have all been benefactors, let's say, to the degree you're an investor in a good, solid economy, and the markets have performed. And Joe and I were talking about this earlier this morning, in that we can get accustomed to those high returns, double-digit returns, and think that that's the norm. But it's not. And so I think we have to all readjust our expectations in terms of what is realistic, and what you cited would probably be realistic long-term, depending on how you're invested. But it sounds like you might want to revisit how you are invested, but it seems that the investments that you have done pretty well so far this year. If you're up over 2% in 2 months.
Yeah, this is important.
Well, let me.
Go ahead.
Well, let me ask you this, guys: is there any benefit going to a Roth? I know I won't be able. She told me on the phone last night to go to a Roth. I'm not going to be able to touch it for 5 years, but I won't have to pay any taxes after 5 years. would it be beneficial maybe going to a Roth IRA at this age in my life,
First
or
of
not?
all, a Roth is not going to change the rate of return on your money. It's what the Roth is invested in. And secondly, did she tell you if you convert it to a Roth, you'll have to pay taxes immediately?
She said that I would not have to do that if I roll. I would only have to, I guess, pay taxes on the capital gains, not on
all of it, Tom, on all of it. So
yeah,
I think.
Oh,
you would
okay.
wanna...
Well.
All right, welcome back to On the Money with a certified financial group right here on News 96.5 WDBO. We are broadcasting live from outside the certified financial group. This today is the Shred event at 1111 Douglas Avenue, so that's why we've got a lot of wind going on. But we also have Queen playing in the background. Of course, everybody knows Bohemian Rhapsody, but Joe, there's a reason we're listening Queen. Why is that?
There is definitely a reason. On May the 2nd, for the 10th consecutive year, Certified Financial Group, along with the Orlando Philharmonic Orchestra, will be hosting the annual Springs Concert at the Springs Community right there in 434 in Longwood. It's a wonderful event. About 3,000 people will gather around on blankets and adult beverages and some refreshments to listen to great music. So they bring in a tribute band. This year it's to be the music of Journey and Queen. So we're looking forward to seeing you there. You can go to orlandophil.org and get some more information, and pretty soon we'll have something up on our website. I don't think it's up there yet, but just want to let you know that's coming. That sells out pretty quickly. It's going to be a great event, and we're glad to be a part of it in conjunction with the Orlando Phil. And all Gary, right. Abely, and I are this morning at our annual Shred event. If you just tuned in, right here at 1111 Douglas Avenue in Altamont Springs, just south of 434. We are here taking questions and shredding your material. If you want to bring by that stuff that you've been accumulating all year long that you don't want to put out there in the trash, we have a big industrial shredder. We ask you to come by, keep it to limit to two bankers boxes, and if you can, also bring by canned good because we're raising some canned goods here for the community as well. So that's 1111 Douglas Avenue in Altamont Springs. It's our home office. And by the way, we're happy to announce that we're going to have a place for client meetings in the Windermere Winter Garden area. So if you're a listener down that area and want to make an appointment with one of our certified financial planner practitioners, you can do that. Go to our website. That's financialgroup.com. Financialgroup.com, or Monday morning call. Or you can call right now, as a matter of fact, because Rodney Owenby is taking calls at our office. It's 407-869-9800, 407-869-9800. But if you have any questions regarding your personal finances, Gary and I are certified financial planner practitioners. We do financial planning and investment management for a fee. We've been doing it for many years, and we're here to take your calls this morning.
Yeah, 844-220-0965. We also watch us this morning on YouTube. If you could put Certified Financial Group in the search bar and go to the Financial Group's YouTube channel, or Facebook, facebook.com. Put On the Money Podcast in the search bar. Go to that page. You can see that video as well. I'm watching the video right here in the studio. I think I saw Billy P. walk by.
Yes, you did. Billy Purdom.
Billy
Purdom, the voice of our commercials. Maybe we'll get him on the air. There he is, Billy P.
One day.
Come on over here. Come on over here.
Got some busy phone lines here.
We're going to get you on the air. Listen to
the
famous voice of Billy P.
Billy P. is out there getting a shred on. That's fantastic.
I'm in.
All right, so Billy P.'s here as well. So everybody from WDBO is out at the shred event.
Right.
That's fantastic.
Always a pleasure to see Mr. B. And, of course, if you're like me, you got a bajillion boxes of all documents that you need to get rid of. But you don't want to put them out in the trash because, so this is a safe and secure way to get rid of all of that stuff. Bring 2 boxes and get them shredded. And that's a service that Joe and his folks are providing today.
All right, and just like that. So just like Billy P., head on down there at 1111 Douglas Avenue, right there at the Certified Financial Group. But we do have some busy phone lines here. Let's get to Jody in Longwood. Who's up next? Jody, go ahead. You're on the Certified Financial Group.
Hello, Jody.
Hello.
Good morning.
Hi, how are you?
Good. What's up?
Great.
My mother passed away, left me her home, and I'm renting it out right now. If you sell that, is that tax-free money?
So what happens when you inherit property is you have a step up in basis to fair market value at the date of death.
What does that mean?
And so it means if the house were, say, worth $300,000 at the time of your mom's passing, and the house is now worth $350,000 because maybe it's been a few years and we've had some good appreciation, then you would only owe taxes on that $50,000 appreciation from the date of death. So in general, you have two options when somebody leaves money to you or leaves property to you. You can value that asset at the date of death or 6 months later. And so you would see what the value of the property was. Sometimes if it's complicated property, maybe commercial property, we might recommend to our clients that they get an appraisal at the time of death so that you would have evidence of what the value is. If it's, today with Zillow and with the property appraiser's office, usually you can make a pretty good case with the Treasury Department on what the value was at a certain time frame. But so does that answer your question?
Yeah, if I'm forced to do the eminent domain, where would you recommend putting that money?
So let's explain what to our listeners, what eminent domain is.
So if the property is taken, maybe there's a new road coming through, the extension of the 429 or something, and the government says, well, we need your property for a public works, for some type of public good, and they have to give you reasonable compensation for that property. And so if the property is taken, as they say, due to that purpose, then where you would invest the money really depends on where your other assets are and what the goal is for those funds. For example, is it something that you'd like to use to help fund your retirement? In which case I would suggest, diversified mix of mutual funds that, cover all the categories of large, mid, small, international, etc.
But you want to do that when you've done some planning.
Absolutely, yeah. So you want to first see, what the tax implications are of selling the property, if any. And sometimes when you sell property and you've been renting it, you have something called depreciation recapture, which means that deduction that you got while it was rented, you're going to have to get that clawed back. They recapture the depreciation deduction that you've taken, and that sometimes results in a bigger taxable gain than what people were thinking. So the other thing that you can use to offset that gain is any improvements you've done on the property. So that's important as well.
Stick on the phone. I have another question for you that I think has been important to you. If you hang on through the break, I'd appreciate it.
Yeah, Jody, hang on the line. That music means we're up against the latest news, weather, and traffic. But, Jody, we'll keep you on here. We'll get right back to the conversation. We are planning tomorrow.
Today.
For a special 2-hour edition of On the Money live from the Certified Financial Group's offices for the Shred event, 1111 Douglas Avenue. We'll be back right after the latest news, weather, and traffic with Dave Wall.
This is News 96.5.
Morning, Austin.
Morning.
Hey, how y'all doing this morning?
Good. What's up?
Ready. Just a generalized question, I guess. I'm currently serving tables, so there's no retirement offered. So I've kind of created my own benefit and started building my Roth. Just a quick question. I was considering the market and the downward swing it's taken in relation to this virus and all that. Would it be better to continue just to build my Roth, or maybe go after stocks? Considering I feel like you can get them at a discount right now with everything that's going on. But I feel like the economy's still there. People want to spend money. They want the products.
Austin, you are a smart young man. Exactly what you said. Things are on sale right now. As we like to say, the stock market is the only market when things go on sale. People run out of the store. People should be running into the store. In fact, this week I had somebody one of our clients walk in with a $500,000 check he's been holding on to. He said, I want in. He says, the opportunity, things are down.
The same thing happened with one of mine.
Smart. That's what smart people do. So, Austin, to answer your question, I would continue to fund your Roth to the max. Now, the question is, what is your Roth invested in?
No, I probably should get some advice. I've been kind of doing this all on my own.
Okay.
And, I'm just with Fidelity and just doing some generalized investing. I'm somewhat new to it all.
Okay. How old are you, Austin?
I am 32 years old.
Okay. All right.
I've been putting money in a savings forever, and I just know that's not the greatest thing to do. With inflation and all, I know I'm losing buying power.
But smart young man.
Well, you do need that savings account, Austin, just simply for your emergency fund.
But put in that
I probably have my emergency fund is Can I just throw a number out there? Do you mind?
Sure, go ahead. It's your money.
No, you're right.
It's your life. What's going on?
I've got two. I've got a 7-month and a 24 or a 28-month-old, and I've been building my savings. I got about 30K in there, and I just know it needs to be invested. I know I'm just losing buying power every year it goes by. It's sitting there.
Well, you're
but at the
100%
same time,
right.
like I said, being a novice, it's almost like I don't know what to pull the trigger on exactly.
Okay, let's back up. You're 30-some years old. Well, first of all, you have a couple of children, okay? So what we want to do is
my perspective on everything.
Okay. So I understand. So what we want to do is take care of those that can't take care of themselves, right, Denise?
Absolutely.
So let's talk about what we need to do to start out with for Austin in that regard before we get into his investing situation.
Well, it's important to take care of those 2 little babies and.
Custodial account, maybe?
Well,
No,
not yet. We want to start with life insurance.
Okay. We want to take care of you first.
Okay.
Absolutely. God forbid anything happened to you and or your wife. You want those kids to be taken care of. So that's going to be one of the first things you need to invest in, okay, if you haven't already.
And Austin, the key here is to buy the right kind of life insurance. Get yourself some 30-year term. Go to Select Quote. Go online. The stuff is cheap. You can get it for almost pennies at your particular age, assuming you're in good health, and get yourself $1 million policy and pay the premium for the next 30 years and hope to God you never use it. And once you got that taken care of, then let's talk about his Roth.
Well, what about his emergency fund? He's
Okay,
talking about he's got
30K.
30K.
30K there. Okay.
Okay. Austin, does your wife work?
Yes, ma'am, she does.
Okay, so general rule of thumb is you should have in a savings or a money market, even though the interest rate environment is so low right now, 3 months, okay, of your net expenses. Just saved, and God forbid one of you lose a job or what have you, you've got something to fall back on without having to attack the credit cards. So that would be number 2 as far as importance. And now with your Roth IRA, you're able to fund it on an annual basis with $6,000. So you say you're at Fidelity, you might think about a nice target date fund that, you're 32, you're not going to retire until 67, 70 or what have you. Take and invest in a target date fund that will take you out to that year in which you turn 70, for example.
So Austin, the other option that you might consider is go purely in the market, 100%, which means you're going to get the full benefit of the market. But when the market does what it's done the last week, you'll be down 10, 12%. But the good news.
Project. Now, our Ask the Experts weekend continues on News.
All right, let's do it.
5 WDBO.
Big girls don't cry. Big girls don't cry.
Welcome back. This is On the Money with a certified financial group right here on News 96.5 WDBO. It's all a part of our Ask the Experts weekend. We're taking your phone calls at 844-220-0965. That's 844-220-0965 with the Oracle of Orlando, Joe, Bert, and Gary Abely, who are sitting outside the offices of the Certified Financial Group at 1111 Douglas Avenue. Why, Joe?
Well, we are here this morning doing our annual shred event. We open this to the community. If you have stuff that you've been accumulating all year long that you don't want to put out in the trash, that privacy kind of things, we are here. We have a big industrial truck shredder and offering coffee and donuts and then giving an opportunity to come by and say hello. Ask you maybe to bring a canned good, too, if you can, to help with the food drive that we also have going on. So that's at 1111 Douglas Avenue, just south of 434 and just west of I-4, right off of exit 94 on the interstate. So we hope to see you. We're going to be doing this for till noon today, so come on by. But the program's going till 11. Gary and I are here to take your calls, things that we do as certified financial planner practitioners. We do investment management, financial planning for a fee. We've worked with our clients as fiduciaries for years, and this is the only financial call-in show that's hosted exclusively by certified financial planner practitioners, and it's where the financial planning is done exclusively by certified financial planner practitioners as well. But we're here this morning absolutely free. So if you have any questions on things that's on your mind regarding your personal finances, pick up the phone and dial these numbers.
844-220-0965. 0965. That's 844-220-0965. And Jody in Longwood is still on the line for you, Joe. I believe you had some follow-up. So why don't, Joe, real quick, just restage everybody what Jody's question was before and what the follow-up was.
Well, Jody had a question. Let me be sure I've got this correct, Jody. You inherited some property, and I think you were renting it out for a while. Is that right?
Yes, just for the last 5 months.
Okay, and then you talked about eminent domain, and for our listeners that may not know what that is, that means that the government entity comes along and says, we need your property for a new road or a new park or new something, and they want to give you some money for your property, and they will pay you for that property. And what you need to know, if you haven't done this already, Jody, is that you need to hire an attorney to represent you for that transaction. Because the beauty of that in the state of Florida is that they will pay your attorney's fees. It doesn't cost you, it costs you absolutely nothing, and that attorney can oftentimes negotiate a better deal than you can on your own. So I want you to keep that in mind. That's why I want you to hang on the phone.
Oh, okay. That's
good
advice.
Did you know that, Jody?
I did not.
Yeah. See,
good.
They'll come along and make you an offer. That sounds great, but they may be worth 2 or 3 times more than what you think it is. So, hire an attorney that's experienced in that regard. And as I said, they will pay the attorney's fees. The state or the county or the city will pay the attorney's fees. That's the law in the state of Florida. So it doesn't cost you anything, and you'll end up with more money in your pocket. So that's the things that we know as certified financial planner practitioners. These are the kinds of things that we bring to the table every day in working with our clients, and we appreciate your call. And if we can help you with the financial planning, Jody, we do that for a fee. We're right here, right around the corner from you in Altamont Springs, right on Douglas Avenue. And by the way, I mentioned this earlier for our listeners. We are opening up a new location in the Windermere Winter Garden area. So if you'd like to come on by and meet us down there as opposed to driving up to Altamont Springs, you can go to our website. That's financialgroup.com, or better yet, call our office. You can do that right now at 407-869-9800. That's 407-869-9800 or 1-800-EXECUTE. Rodney Owenby's in the office right now. He's a certified financial planner practitioner as well as a CPA. He'll take your calls and answer any questions that you might have, and you want to make an appointment with him, you can do that as well.
All right, just like that. Again, 844-220-0965 is the number to call into the radio show. And, Joe, that number once again?
Is 407. I mean, after 40 years, you don't think you know this? It's 407. We've had the same number for 40 years, 407.
I've been trying to get you to say that all day. It's like, how long is it? How long do you have? Why am I remembering?
For 40 years, the same number, Kyle. 407-869-9800, 407-869-9800, or 1-800-EXECUTE.
All right.
And the number for the radio show is what?
844-220-0965. Chris in Orlando has dialed us up. Chris, go ahead. You're on the Certified Financial Group.
Hi, Chris.
Hey, thanks for taking my call. Yes, about 10 years or so ago, I bought intermittently about 10 gold coins between $1,200 and $1,600, and I'm not able to find all the receipts. And I know there used to be a penalty for disposition without receipts. Has that changed with the tax law? And how much is it again? And any suggestions if I can't find the receipts?
Well, in general, you're going to be reporting the gain, in this case, because gold is higher than what you've paid for it, on a Schedule D for capital gains or losses, and it'll be long-term. And just as an aside, a lot of people don't realize, but the long-term capital gains rate for many people is actually 0, right? So if you're a couple and you have gross income of around $100,000 after your standard deduction of a little under 25 for this coming year, you would actually pay nothing in long-term capital gains tax. So that's one thing. But there isn't a specific tax if you don't have the records for what you paid for it. If you have the dates, for example, of when you purchased it, you'd be able to, make a reasonable case that, okay, gold was this much. Usually we know that you're going to pay, maybe another $60 an ounce to buy a coin, unless it's a proof coin or something where it's collectible. So I wouldn't worry about any special fees. Do your best effort to calculate what the gain or loss is based on the years. And the beautiful thing is you can go on to finance.yahoo.com, look at the price of gold on or about the dates that you bought it. If you don't have the actual records, and just make a good faith estimate, and that's really all the U.S. Treasury Department can ask you to do.
And if that's the only investment you're selling in that year with a modest number of coins, as Gary said, chances are you don't have any taxes to pay anyway. So keep it above board, file that Schedule D, and you shouldn't have any taxes to pay, and you can head on down the highway.
Thank you very much.
You're welcome. Thanks for the call.
All right, Chris, thanks so much. On Chris's line, it's 844-220-0965. Our phone lines are lighting up here, so let's get right back to John in Apopka. John, you're on with the Certified Financial Group.
Good morning, John.
Good morning.
Yes. Good morning. I recently sold a rental house and wanted to know what some of the things we could do to minimize the tax consequences.
So the best thing is get out your old receipts for, did you put up a fence? Did you replace some windows?
Right. I know about that.
Okay.
Yeah.
So then to calculate the gain or loss, you're going to be looking at, of course, you can deduct all of the sales costs for selling the property. So you're only going to be paying on what you net. So if you have real estate commission, if you have closing costs, etc., that reduces the gain. But the one thing you're going to have to do is what increases the gain is, again, as I mentioned with an earlier caller, depreciation recapture. So your basis in the property is simply what you paid for it, plus the costs associated with purchasing, plus improvements.
Not maintenance.
Not maintenance,
See,
right.
A lot of people get that confused, I've seen. They say, I put in new carpeting, I painted it. That's all maintenance, and that's deductible in the year that you do it.
That's right.
But it doesn't increase your cost basis.
Yeah, so the key thing is if you've deducted it as a repair, you can't turn around and deduct it later. But if it's an asset, like you put in an air conditioning unit, you typically depreciate that over 15 years. So you'll be able to recoup that, what you haven't depreciated thus far. But so specifically, you go through that exercise and you subtract the basis, which again is your cost plus the cost to purchase, plus any improvements, and then you compare that to the net sales price that you receive, and then you've got to add back in whatever depreciation that you've incurred.
If you have a large piece of property, you have a large gain. The only options that you have to defer the taxes is to do a 1031 exchange,
right, or
put in a charitable trust. You can defer the taxes and then get income for your lifetime. So those are basically the options. But there's no thing of taking. Some people kind of think, Gary, that remember the old rule about your residence. If you bought another equal or greater value, you can roll the gain into them. Well, those days are gone.
Can't do that.
And you can't do that with an investment property unless you do it as what's called a 1031 exchange. And there you need a qualified intermediary to help you with that transaction.
Now, one other thing you can do
Tell me.
Is you can sell on the installment sale.
There you go.
So you could say to a potential purchaser, give me $50,000 down or whatever equity that you would want to be comfortable in. And then you could say, pay me over a period of time. And that's useful to stretch out that capital gain over many years, especially if you're in that situation where the capital gain, if spread out, wouldn't be taxable. So sometimes, financing the property for somebody and collecting that principal over time helps save taxes.
So those are some options for you.
As far as the tax liability, whatever tax bracket you're in, that's what it would be?
Exactly. Now, it's the sale of a capital asset, but a portion of it might be taxable as ordinary for recapturing depreciations. But in general, yes.
You have capital gains treatment on it.
Okay.
Okay?
Okay. Thank you so much.
Appreciate the call.
All righty, John in Apopka, thanks so much for dialing us up, 844-220-0965. Let's see if we can squeeze in Frank before the three big things you need to know. Frank in Barefoot Bay, you're on the Certified Financial Group.
Good morning, Frank.
Good morning.
Good morning.
Frank?
This is my term.
Frank, where's Barefoot Bay?
I beg your pardon?
Where is Barefoot Bay?
South of Palm Bay.
It's on the east coast of Florida. It's in Brevard County. It's the south end of Brevard County.
Got it. All right.
It's just south of Melbourne.
Great. Well, thanks for the call. How can we help you?
I'm over 84. I collect Social Security, and I still work. And I have about $25,000 I would like to invest. That's just laying around, and I'd like to be able to get some type of interest on it, and I don't know which way to go with it.
Well,
I wouldn't have to absorb it all in taxes or something.
Well, because you are working, you can actually contribute now to an IRA or a Roth IRA.
I think he's looking for income.
Well, but you're looking.
Yes, sir. I do have an IRA. I don't know if I could contribute that much money back into it, and what it would cost me to do it.
So it'll actually potentially save you. So you can deduct contributions you make to an IRA, or you can put money into a Roth IRA and not take a deduction, but then that can be left to your heirs tax-free. So it really depends on your own tax situation whether a deduction would be useful to you or not, whether you would pick the regular IRA versus the Roth IRA. But that law just changed, by the way. So, used to you could continue to work into your 80s and you could continue to contribute to your Roth IRA, but you could not make a contribution to your regular IRA. Well, that's changed, right? So now we get to do that now. But in terms of where to invest it, I think if that's more the question, we would really want to know more details. For example, where your current investments are allocated and what the intended purpose of this money was for. Let's say, for example, you'd like to set this aside and maybe help grandkids 529 plan or an education plan, or maybe you'd like to be leaving this to your children. We might suggest a different asset category than if this is just for you for income. If it's you for income, there's not a lot of wonderful options. Unfortunately, now that the 10-year Treasury yield is around 0.7%, but certainly some bond funds, would be helpful that you might get 2 or 3% on in a typical year right now in these low interest rate environment.
I see.
That help you out, Frank?
Okay. Give me a direction to go. Yes, it did. But I do want to try and maybe use this for my income because I don't know what happens up the road. Like I said, I'm in my 80s right now. I'm good shape. I'm still going to continue to work and hope for more time. And whatever's left over is going to go to my heirs. But in the meanwhile, I might need it for my own income.
Sure.
Right. So I would look at your tax situation, maybe talk to your preparer and see whether it would benefit you to contribute to an IRA or whether a Roth IRA makes more sense.
And you can get tax-free income today in the range of about 4% in a tax-free bond fund. If that, but the problem that you have investing in bonds today is that the value of those bonds are going to deteriorate as interest rates go up. But if you're just looking at pure income, that's not a bad way to go as well.
Okay.
All right.
Thank you very much
for your help. Thanks for the call.
Thanks for you have a good day.
You do the same.
Absolutely. All right, Frank, thanks so much for the phone call. If you want Frank's line, it's 844-220-0965. It is time for the three big things we need to know. But, Joe, in case anybody wants to give the office a call, because it's up almost 11 o'clock, what's the best number to reach you at?
407-869-9800, or better yet, 1-800-EXECUTE. 1-800-EXECUTE is if you're executing a legal document. Rodney Owenby will be here till noon taking calls, and if the line is busy, leave him a message, and he'll be glad to answer any questions that you might have.
All right, Stanley in Winter Park, hang on the line. You're going to be right after we get the three big things you need to know.
Now the three big things you need to know.
Morning, Joel.
Morning.
Good morning, everyone. How are we doing today?
Good. What's up?
So I'm in my 40s. I got a couple of kids, and obviously thinking about already the future. But I had basically a retirement plan with my old company. That was about 10 years ago. I kind of left it there, and it's been growing, but I really haven't, quite frankly, paying any attention to it. I'm not putting any additional money to it. I just kind of left what was there. Now I'm with a new company, and obviously it's been 10 years. I have a new retirement 401k. So I just wanted to know, should I even bother transferring what I had in the other company since it's growing, obviously with the marketing and everything happened this week. But, should I just even bother transferring or just kind of leave it there?
Possibly. It depends on what platform, if you will, that the old plan is on and your new plan. Is your old plan with an insurance company 401k?
No, my old plan is basically with It's not with an insurance company. It's basically with the airports. I used to work for OIA.
Okay, good. Good.
And basically,
what's
they had their retirement company.
And what's the new company? What do they have?
The new company is with the county.
Okay, good. Yeah, I would move it. What do you think, Denise?
Well, yeah, because you're going to pay attention to it more. Where it's sitting, you just told us that for 10 years you really haven't looked at it. But if you roll it over into your current plan, of course, if that plan document allows it, then I think you might be more on top of things and be doing the right things for yourself.
And you want to do a direct transfer, go to HR and give them the information on that plan and move it over there. This way you don't lose track of it either.
Yeah.
It's best to have it in one place.
Let's get right back to the callers. Go to Vinny in Orlando. Vinny, you're on with the Certified Financial Group.
Vinny.
Hey, Vinny.
Hi, how are you? Thank you for taking my call.
Sure, what's up?
I have a question. My wife started the LLC this year
Okay.
as a sole proprietor,
Okay.
and she has like an income of about 30,000 this year.
30,000?
I have a question, right, for whole year.
Okay.
So question is like how she can invest for 401k or like IRA, you know? How much amount she can spend for that?
Sure. Probably, well, depending on what her cash flow situation is, as a minimum, she could probably do an IRA tax deduction.
Visit guaranteed or you pay nothing. Tried Viagra, Cialis, or Levitra and they've let you down? We can help you now. Call 407-674-5738. That's 407-674-5738. That's 407-674-5738.
Find single malt, blended scotch, bourbon, whatever your desire, you'll find it March 14th at the Orlando Whiskey Festival.
All right, 15 seconds.
To experience over 100 different types of whiskey, click the whiskey button in our app. Cheers to Mansion Window and Door, Doers, Scotch Whiskey Double Aged for extra smoothness, and News 96.5 WDBO. This is News 96.5 WDBO.
All right, welcome back. It is the final segment of On the Money with the Certified Financial Group right here on News 96.5 WDBO. And I believe we have another planner at the broadcast
Murphy
booth
the
there.
Wonder Dog.
Murphy the Wonder Dog. If you're watching this on YouTube, TV, or Facebook Live, you can see we have a dog right there in the middle of the desk there at the Certified Financial Group. Live at the Shred event. Whose dog is that, Joe?
That's Roger Johnson's dog.
It's
Yeah,
the
Roger.
best dog ever, too.
You
So
come,
he is
Sammy, you
just
don't
up
hear
there.
that, do you?
you come in the office and the dog's sitting on Roger's desk.
With glasses on.
Well, he saw the cameras, saw the microphones, and wanted to jump right up there.
Yes, he did.
And get in the center of attention. That's as cute as heck. All right, well, we are 3 minutes away from the latest news, weather, and traffic. And so let's get back to our busy phone lines here. It's what we're doing here on the radio, News 96.5. Stanley in Winter Park is up next. Stanley, go
what's
ahead.
up?
Hey, how you doing? So, listen, typical American dream, running a business, and I'm renting a building. I want to buy the building to try to get myself a little more secure and, obviously percentage of rent going up every year. I'm just curious. It's an S corp that I possess now. If I buy this building, I mean, am I going to have to, basically rent it to myself to be legally in it, or can my business just pay the mortgage out of that and they consider that the write-off?
Well, who's going to own the building? Would you have the company own the building, or would you own it personally?
I would own it personally.
Okay. So
let me tell you what happens. The state will get you for sales tax.
That's exactly where I was headed. Yep. So you're going to have to pay the company, which you own, is going to have to pay you a reasonable rent on that building. Now, obviously, you want to keep the rent down as low as possible because you don't want to have to pay the sales tax. So what you would want to do is do some comparisons and see how low you could keep the rent and it still be reasonable, so that you're not because that's just a sunk tax. I mean,
Right.
we don't get anything for that. It's so you really want to try to limit the rent on that. Now, if the
right,
I suppose if the business owned it,
then there's no sales tax.
You don't need to, right? And so I would maybe talk with an attorney about the pros and cons, and I can think of some cons of the business owning a piece of property. And the cons, of course, are if the business is sued, that's going to be a business asset that could be part of that suit. Whereas if it's personally owned, and the business is sued, well, it's not a business.
Right, but if somebody gets injured on the property.
Right, and you own it personally, right, that might be why you would have it in a separate business,
right,
like an
LLC.
Right. But, yeah,
So
I'm afraid for most.
let me jump.
Yeah, go ahead.
Oh, I was going to say, so let me jump ahead a little bit and just see if we're going to go in the right direction. I do have an LLC set up, and I'm prepared to transfer the deed into that LLC to make all this happen.
Okay.
Are you saying if I actually do go ahead and pay the basically take what I'm going to owe on the building, obviously to transfer that, if it's existing ownership, you're going to have to pay, I think, what is it, like 2% or something to get that deed transferred?
For doc
Is that right?
stamps.
Right. Yep.
Sure. Okay. But in the end, if I do that, it could essentially cost less to do that than it would paying the sales tax over the term of the loan. Is that right?
Well, it could, but keep in mind that it's the business that would have to own it, right? The business that's using the property. You couldn't, as a person, set up a separate LLC and then have the business pay no sales tax. So, but yes, I mean, because I hate the idea of paying sales tax, I'd probably take the legal risk myself because I don't like paying taxes. But yeah, that's a decision to talk with an attorney about.
But I can guarantee you the state of Florida will find out about the ownership arrangement there and want sales tax and back sales tax as well. So you got to be careful.
Very careful.
Seek an attorney.
Those are the worst audits.
Right. Seek an attorney on that.
Great. Okay.
All right.
I appreciate it. Thank you.
Thanks for the call.
All right. Thank you so much, Stanley. Appreciate it. And that's pretty much going to do it for this week's edition of On the Money with a Certified Financial Group. Joe, how long are you guys going to be out there for?
Well, we've got till noon. We'll be shredding. Bring your banker's boxes. A couple of banker's boxes here at 1111 Douglas Avenue. Come by, meet the planners. We've got hot coffee and donuts. Like to meet you. 1111 Douglas Avenue in Altamont Springs. And we look forward to seeing you. Till noon.
All right, we've been planning tomorrow
today
with a Certified Financial Group right here on News 96.5 WDBO.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.